Hello traders, in this video I'll be revealing everything that you need to know about Trendline. So what you will learn in today's video is, first I will show you how to draw a trendline properly, then I will show you how you can utilize this trendline to find high probability trade setup. So without further delay, let us get into today's topic. Let me quickly explain what is trendline for those who do not know what it is. Trendline is nothing but a key level that is formed below the trending market. The main reason why you need to draw these trend lines is because it helps you to identify these key levels which can offer you high probability trade setup. For example, in trendline strategy, there are two types of pattern which can be formed when a stock approaches a trend line. The first pattern is called continuation pattern. In the first pattern, the market starts to move in the same direction after touching the trend line. For example, if I draw a trend line like this, we clearly see the stock is in uptrend, right? It's forming low, high, higher low and higher high. And this level is acting as a strong support level. Once the stock comes to this level, it starts to bounce back in the same direction from which it started the trend. So this pattern is called continuation trendline pattern. In the second pattern, the market changes its direction after the breakout. For example, if I draw a trend line like this, we clearly see the market is in downtrend, right? After this downtrend, we get a breakout here, and when the stock price breaks this trend line, the stock starts moving in the opposite direction. So this way of trendline trading is called trendline breakout strategy. Please remember, just because the stock touched the trend line, it does not guarantee that the trend will change. We need to use additional price action techniques which I'll be discussing in this video. The common question which a lot of traders have is, should the trend line touch the wick of the candle, or the candle's close, or the candle's body? The answer for this is very simple. You should draw them in such a way that you get the most number of touches. For example, we can see that the stock is in uptrend. How do you confirm it is an uptrend? Because this low is lower than this low, and this low is lower than this low. Likewise, this high is higher than this, and this high is higher than this. That means the stock is in uptrend. When a stock is in uptrend, the trend line has to be drawn from the below. Okay, once you draw this trend line, you have to align it in such a way that it has maximum number of touches. Say I'm aligning it like this. So it's touching here, here, here. So this trend line is acting as a strong support level. Here you can notice a candle is crossed the trend line and some candles are not touching the trend line. That is fine, because a trend line cannot always be accurate. This is just a line which helps you to understand the market trend. Okay, now let us see one more example. In the second example, we can see that the stock is in downtrend. See, high, low, lower high, lower low, lower high and lower low. Now we clearly know the stock is in downtrend. When a stock is in downtrend, the trend line has to be drawn from the above. Okay, and now you just have to align it in such a way that it has maximum number of touches. It touched here, here and here. The only thing which you need to remember while drawing a trend line is it has to have maximum number of touches. It doesn't matter if it is wick to wick or body to body, but the only thing which you need to pay attention to is it has to have maximum number of touches. Okay, now that you know how to draw a trend line effectively, it is time to go in depth into how you can utilize these trend lines to find high probability trade setups. Traders, the first way how you can trade using a trend line is through continuation pattern. So now, if I draw a trend line like this with maximum number of touches, right? The stock touched here, here, here. Now this level is acting as a strong support level. But just because a stock is here, it does not mean that this trend line can still act as a strong support level. Anytime the stock can break this level and go down. That time will be in loss. So we need to take a second confirmation. What can be the second confirmation? See, I can draw a micro trend like this. Okay, now when the stock breaks this level, I can enter the trade. Now you can see the stock broke this level and the stock is moving towards the upside. So when you get a breakout candle, you can enter the trade. Okay, so it is important that you draw a micro trend as a second confirmation rather than just entering the trade when the stock is in support level. So this was the first pattern, the stock moving upside, micro trend, and in continuation pattern, the stock will start moving in the same direction after hitting the trend line. You need to draw a micro trend for second confirmation. Okay, now let us see one more example. This is an example of continuation pattern when the stock is in downtrend. When the stock is in downtrend, we need to draw the trend line from above. Okay, so in continuation pattern, we're expecting the stock to go down. We cannot enter the trade when the stock touches this level. Okay, see here it is a big hammer candle, so we need to draw a micro trend like this. So when the stock breaks this micro trend, we can enter the trade. See, the stock broke this micro trend and we will enter the trade in the next candle, and the stock started moving towards the downside. Here you can clearly see the stock continued to move towards the downside after breaking the micro trend. This micro trend is acting as a second confirmation. I hope you understood. Apart from micro trend, there are other indicators which you can use to confirm the continuation uptrend pattern. Now if I just click on indicators, search for stochastics, here it is. This indicator can help you identify continuation uptrend pattern. Okay, let's see how it does. I will draw a trend line like this with maximum number of touches. Okay, at this current situation, stochastics is showing oversold, right? At this time, we should not enter the trade. We need to wait for the stochastic to come towards the upside. Okay, now when the next candle opens, we can see stochastic is moving towards the upside. So we can enter the trade when the next candle opens. And then the stock started moving towards the upside. Now here we can see the stock is in downtrend, and I have drawn a trend line, and stochastic is showing overbought. In continuation pattern, we expect the stock to move towards the downside. So we need to wait for the stochastic to come down. See, in this next candle, stochastic from overbought, it's coming to oversold. At the low of this candle, we can enter the trade, and let's see what happens. The stock started moving towards the downside. So this way, you can use stochastic to identify continuation downtrend or uptrend pattern. But please remember, stochastic is a lagging indicator. It will take little more time to give you the confirmation. That is the main reason we use micro trend, as price action is the best way to find trading opportunity. Now let us see the second way how you can trade using a trend line. Now the second way of trading with trend line is called breakout pattern strategy. Here, if I draw a trend line with maximum number of touches, okay, this trend line is acting as a strong support level. So if the stock price breaks this level and goes down, it is called a breakout pattern. If you see here, the stock broke this level and went down, correct? And this was the breakout candle. Just because the stock broke this level, we should not enter this trade. There are other confirmation which you need to take before you enter a breakout pattern strategy. Okay, let's understand what are this confirmation with an example. We can see that the stock is in uptrend. This high is higher than this high. However, this high is lower than this high. This means there is a momentum loss. Momentum loss happens only when the buyers are no more interested to push the stock price up. So this gives us a high probability that the stock is going to change the trend. So let's see what happened after this. The stock gave us a breakout, right? Since we have a momentum loss and the stock is giving a breakdown, we can enter the trade by taking momentum loss as a confirmation. After this, the stock price just kept going down. Okay? Now let us see one more example. In this second example of trendline breakdown strategy, we can see that the stock is in downtrend, right? See, this low is lower than this low, and this low is lower than this low, correct? And here if you see, we have got a breakout, but we should not enter the trade just because we got a breakout. Here the second confirmation can be this. The market continuously made lower lows, but here this low is higher than this low. This means the sellers have exhausted. So this can be our second confirmation. After this, if you see, the market started going upside. Correct? Traders, I hope you understood. We cannot just trade just because we got a breakout. We need to check for additional confirmation. Okay, another price action analysis which you can do to find breakouts is finding double rejection. For example, this stock is an uptrend, right? But if you see here, there is a double rejection, right? The market rejected this price 2 times. That means there is a high chances for the market to go down. And this candle, if you see, we have got a breakdown, right? Because we got a double rejection and we got a breakdown, this confirms that there's going to be a trend reversal. So if you see what happened, the stock price went down. So double rejection also you can include in your analysis, which will help you to identify proper breakouts. Okay, it helps you in double confirmation. We can see that the market is in downtrend, right? If you watch closely, the market has made double bottom. That means 2 times the price has been rejected at the same level. Now after this, we got a breakout. So the double bottom was the first confirmation and the breakout was the second confirmation. After this, the stock price went up. Okay, so this way we can use double top and double bottom as a confirmation to trade in breakouts. Another way to trade with Trendline is with using an indicator called RSI. Let me show you how. First, go to indicators and choose RSI. Once you do this, you need to make some settings. Go to settings and change the style to 50. Once you make these changes, you have to see only one line like this. Okay, when the stock price is above this 50 level, you need to look for buying opportunity. When the stock price is below this 50 level, you need to look for selling opportunity. Alright, so if I draw a trend line like this, okay, I need to wait for a breakout. Once the RSI is above this level, I can enter the trade. RSI acts as a second confirmation. You need to follow the same thing when you're trading in downtrend. The RSI has to be below the 50%, then you can enter the trade. Okay, so I just revealed to you multiple trendline trading strategy which you can use and trade right now. All I ask you in return is just to invest 2 seconds in liking the video and subscribing to the channel. It only takes 2 clicks, but it means so much to me. And you can also check out my other videos as well. So thank you for watching. I'll see you in the next video.